you like my actual approach of, like, for example, what I do. Just ignore the background, it's Ari. So as you can see, all of this is what I do during the day in the actual morning, and this is what I prefer to do rather than, for example, post an Outlook. And I will always do this, and then maybe at the end of the day I can break down exactly how the market was set up. But sometimes, depending on how I feel, I will also what was I gonna say? Like, do real-time outlooks. All my stuff is real-time. So I mean, you can see here. Yeah, real-time shit. So yeah. So if I break down how the market was set up relative to what I had posted here, you can see I said 1.3 easily on the cards based on the newly emerging pushes, non-sufficient candle quantity push to the downside, and how the angle of the push would suggest more expanding / unraveling structure towards the downside, making this current at-hand push in play more structured before it turns to the upside. So relative to 4-day time periods, the market is likely not done with pushing to the downside, which is what I said in the past in the previous video too. So just based on the structure, you know, and the angle, doesn't look done. And then, yeah, same thing with every single day. You just deal with how the chart is set up relative to time frames top down as of the given day. So the daily, relative to the daily chart perspective, and assessing it for how it is set up, for what it is set up, for what it is iffy, based on the market sat right at the very lows of a well sufficiently structured at-hand push to the downside. And the angle of the market is the angle the market is pushing in relative to the daily chart perspective at-hand push overall, we see is fading off from its heavy push to the downside. But next step higher base time frame chart perspective set up the way they are in daily setup in this fashion, it would be very worthwhile seeing how next step lower base time frame chart perspectives are set up. So what I mean by this is, with the daily chart set up in this fashion, meanwhile next step higher time frames are set up in their way, poised for bearishness, it takes off the significance of the market being sat right at the lows of an overall hand push to the downside. Because this, if higher time frames weren't bearish, this would be a bit iffy selling. You know, you wouldn't really want to sell a market sat right here, especially with a wick rejection too. But then this wick rejection and this structure overall, if we go down to like the 8, it gets uncovered and like more, it becomes more granular, and you can see more, and it was likely to keep pushing. 4 hour setup, beautiful for continuation though. I know relative short-term structure, it was sat right at the highs. This bar, the way it closed amongst the existing structure of the at-hand short-term 4 hour push, it was sat right at the highs. The angle was faded, it was overextended short-term relative to 4 hour, and it was just likely to keep pushing lower to around here-ish. And I don't think the market's actually got there yet, but I do expect these lows to be took, just based on how time frames the next step lower are set up. So, and then this is how I deal with the 1 hour. So the 1 hour, like I said, I know it's not in the English language, but I call it dictatory. So it's basically the time frame that, like, I look to assess how it's set up through the contextual lens of how time frames overall comprehensively are set up. And then what would be the most appropriate way to look for the 1 hour chart to set up, to then go on side with that concluded most probable direction the market's likely to push in relative to each time frame segment. So like, okay, the daily is likely to go in this direction, the 9 and 8 is likely to push here, the 4 hour too. If the 4 hour and 9 and 8 are linked together, this, like pointing towards for the momentum unraveling in the same direction, then that's like those time frames like come together and it builds an even stronger narrative of the market pushing in that direction that it's set up to do so over time periods, or in short, over the subsequent ensuing time period relative to the referred to time frames, which in this case would be the 4 hour. Like, so over the next 4 hours up to 9, you would likely see the market push in that direction that it's set up to do so, whichever one it is. So what we do now is see how the 1 hour chart perspective is set up, whilst, like I said, next step higher base time frame chart perspectives are set up in their according respective fashion, and see what would be the best way to approach the 1 hour. So in terms of either looking for intra-session liquidity sweeps or off the bat from the prices the same or better from those available at 6 or 7. So what I mean by that is like, so if the market's set up relative to 1 hour to straight off the bat, like from prices better, relatively the same as those available at 6 or 7, or better, look for a setup to form. But like that would also include not seeing the price like trickle down lower, because that wouldn't be prices better or the same as those available at 6 or 7, right? But some cases we would like to see the market retrace to the 1 hour hand push region, such as like here, and then depending on how higher time frames are set up, see a 1 hour sufficient first initial intent exhibit at the bar close. I'm aware I'm speaking very fast, it's because I don't want to keep the video that long. Or if the time frames are set up like Friday's case, the 11th of October 2024, they were set up relatively nice to keep pushing lower straight off the bat, but the 1 hour chart wasn't really set up in that nice of a state to go straight off the bat. So you would want to see, you would want to be lenient with the way you approach it. So you'd mark the fib out, marking the hand push leading up to 7 in the morning, and you would look for a 15-minute first initial intent exhibit of the day bar close at the 1 hour hand push or optimal trading range region. And then once you get that, you would then be able to look for a setup, which is just a nice bar close above Frankfurt time period or London or Asia. So yeah. Just yeah. So we see the 1 hour sat at the lows of the short-term 1 hour hand push, what unfolded to the downside as of 7 AM. With the way 9 hour chart perspectives and down, that should say, and down are set up, and with the 12 hour setup the way it is, it uncovers the reality of how the 12 hour chart perspective is set up, and it is actually also cooperating with pushing to the downside. Yes, so like I said, the way the 12 hour push was set up, if it's iffy, we can uncover the reality of how the 12 hour set up by looking at how lower time frames are set up, because like how the 1 hour chart's actually set up, or for example the 4 hour, well, there's a few 4 hour time periods in the 12 hour, 4, 8, 12, there's 3. So how the 4 hour chart's set up in iffy circumstances where like the market's kind of compact like it was this week, you can uncover the reality of how it's set up by looking at next step lower time frames. This is why you use all time frames together, you utilize them all, you make use of them all. So like I said here, see the market retrace to the 1 hour optimal trading range region and then 15M counter close. So just basically see the market retrace from the lows to a bit better prices than those available as of 7 AM, and see the market come up from being like, see participants trade the market to better prices, what would lead subsequent participants more likely to even more agree upon selling, right, based on like how the higher time frames are set up too. So I'm not really explaining this that well to someone who's a novice, but as someone who's experienced, which is who this would be tailored for, would probably be able to understand what I mean even without saying anything. So yeah, without the 1 hour sufficient playable range, what was it? Yeah, so without the 1 hour sufficient at hand playable range, what was available as of 6:07 AM, being closed in. What I mean by that is, see, I don't even mark things up on my chart anymore. So from this low to this high, this was the hand playable push range that was available. You wouldn't want to see this like be closed in fully. And then because I had been winning so much and I haven't took a loss since June, I needed to remind myself to stay level-headed about the whole situation in the moment. So like when I was in the trade, and 11:15 was in the trade, like in the moment. I think you'll be able to see this here. Yeah, see, so like as of here, the market was still like messing around. Basically, at prices, the market was still sat trading around the region the market was situated at as of the price I had available to hit the bid at. So yeah, and then I just basically wrote that. I'm not going to read all of it, but like I said, all we do is come to the charts at 7 a.m. and it says how the market is set up from the time frames I do, and conclude what the most probable direction is that the market's set up likely to push in based on the existing structured state of each time frame's at-hand push, including its angle, considering where amongst that at-hand pushes low and high range the market is situated at whilst it's structured the way it is and angled, to come to that direction of, or come to that assumption / conclusion on whether the market's likely to keep pushing in that direction it is, or whether it's iffy, or whether the circumstances are ripe to look for sufficient anatomic bar closes relative to the time frame chart perspective being analysed to sort of time the reversal. So if it's not clear whether the market's likely to keep pushing in its direction, but it's kind of just sat at the very highs of an at-hand push to the upside, and it's just sat trading at that region, you would kind of just want to wait for like a nice bar close to like, okay, then be like, okay, well then relative to this time frame duration, it's like the reverse is likely to come, over, which would ensue over time frame duration relative to whatever time frame's being assessed. So yeah, so like, and then also conclude the direction the market's likely to push in relative to its stages. So like, for example, if you've got like, so you've got categories of time frames. You've got your intraday time frames, your higher time frames, and your major higher time frames. Your intraday time frames run from 1 hour to 4 hour. Your higher time frames run from 7 rather, sorry, up to I would say your higher time frames run from 7 till daily, and then your major higher time frames run from 2 day up to 3 month. So you can, and then you can also like have like short term major higher time frame direction, which would be like your 2 day up to 4 day, because obviously that's like within a 3 month time period. You've got a lot of 2 day and 4 day time periods. So the monthly might be set up to keep pushing to the upside, but the 2 day might be set up to push to the lower. And then within that overall 3 month direction, you could have a peak and trough scenario unfold where like within the overall most probable direction, the market comes down a little bit during that overall 3 month time period as it primarily pushes to the upside. And then yeah, this was the description that I wanted to write just in case YouTube took the video down, and yeah, that's it basically.